Good morning and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's see how we finished last week. On Friday, global equity markets feeling mixed as investors look to further cutting by the US Federal Reserve. That was in the wake of solid US jobs data and a unemployment rate that lifted slightly in the States. Now the Nasdaq and S&P again closing at record highs, following upbeat forecasts, whereas the Dow finished lower. And for the week, the Nasdaq gained 3.3%, the S&P about 1%, and the Dow fell just over 0.5%. And the CBOE Volatility Index falling to its lowest level since July. Stocks, specifically shares of Lululemon, surged after the sportswear maker increased full-year forecast, and shares of cosmetics retailer Ulta Beauty also jumped after the company raised its annual profit forecast. Health insurance companies came under pressure, including United Health, which extended its declines after the chief executive of its health insurance unit was shot dead outside a Manhattan hotel. Elsewhere, shares of Facebook and Meta rose after a US appeals court upheld a law requiring China-based ByteDance to divest its popular short video app TikTok by early next year or face a ban. Shares of AI server maker Hewlett-Packard hit an all-time high after topping estimates for the fourth quarter revenue. And shares in lingerie maker Victoria's Secret rose to its highest level in more than 2.5 years. Well, US jobs growth surged last month, with non-farm payrolls increasing by 227,000 after being severely hindered by hurricanes and strikes. The unemployment rate rose to 4.2%, pointing to an easing labour market, which is expected to convince the Fed to cut interest rates at its meeting next week. Meanwhile, Federal Reserve Governor Michelle Bowman has said the inflation risks to the economy remain real, saying, "I continue to see greater risks to the price stability side of our mandate, especially when the labour market continues to be near full employment. I would prefer that we proceed cautiously and gradually in lowering the policy rate as inflation remains elevated." And Chicago Fed President Austin Goolsbee saying, when looking forward over the next 12 months, rates are going to be a fair bit lower than where they are today. Meanwhile, President-elect Trump has said that he would not be seeking the resignation of Fed Chair Jerome Powell. Now, US Treasuries, they fell to a 6-week low after the jobs reports. The yield, that is, the 10-year, down to 4.14%, the 2-year at 4.09%. And the US dollar rose slightly, whereas pressure remained on the Aussie, which fell below 64 US cents. In fact, that's where it is at the moment, is at 64. And Bitcoin is around 100,000 US dollars. On the commodities front, oil prices have fallen as analysts project a supply surplus next year and weak global demand. And the market also keeping an eye on events unfolding in Syria. At the moment, Brent crude futures were 1.4% lower at $71 a barrel, copper rising marginally, iron ore down more than 1% to $103 US dollars a tonne, and gold edged higher at $2,632 an ounce. Well, let's take a closer look at what we're seeing on US markets at the moment. To do that, we're joined by Lachlan Hughes from Swell Asset Management. Lachlan, great to catch up with you again. And another day, another record on Wall Street with the Nasdaq and the S&P. What are you seeing there where that momentum is continuing, I guess, particularly in the wake of the macro data we're getting?
Yeah, Andrew, look, I mean, the market continues to be very resilient and hanging in there. Not only that, it's pushing new highs now. So, if you look at the economy, if you go back 12 months, I mean, not too many people would have thought if we'd had 500 basis points of tightening by the Federal Reserve that would have impacted the economy in some way, which at the moment it's still coasting along. And like you said, obviously Nasdaq has been strong on the back of good technology earnings, and the rest of the markets is hanging in there as well. So I know despite all this though, we're still finding opportunities out there in small pockets of the market. But there's on many metrics, when you look at the US market today, it does look expensive. So I think going forward, it's really going to be a stock pickers market, and despite all the share price rises, we're still finding opportunities out there.
So Lachlan, are you a little wary of particularly the growth stocks, those mega cap? We're talking about the Mag 7, maybe Mag 6 now. Given how that has driven the market to date, would you be a little more cautious about exposure there?
Yeah, look, I mean, the two that stand out as being, huge expectations priced into them. One is Tesla. Tesla's the standout of the Mag 7 if you're looking at a company that is trading at a very high multiple relative to the growth that we expect over the next couple of years. But I guess that just tells you that people are expecting growth in the outer years. Obviously, Optimus Robot, the Cybercab, that's always going to be there at some point. But over the next few years, yes, look, Tesla looks expensive. And Nvidia, despite the fact that it's had a big run up, it does look a little bit expensive, but relative to the growth they'll get in the next 12 months, it looks okay. But if we look outside of those, Google is probably the cheapest of the Mag 7, and that's really trading around the whole risk around the FTC and their decision and what's going to happen to their search business. So look, that's one that is looking very well priced at the moment, but obviously it's well priced because there's uncertainty out there, and of course the market doesn't like uncertainty. But if you look at the other stocks, the cloud companies, Microsoft, Amazon, look, they look okay. I mean, in terms of valuation, we still think they look relatively well priced relative to their outlook, and we still see the cloud as being a huge opportunity for them.
Well, you mentioned Amazon there. In fact, it recently held its annual investor event, Invent conference, where it unveils its latest tech. What did you take out of that?
Yeah, look, Andrew, it was a very good conference. We heard from Amazon. Well, if you roll back 12 months and you look at what the pundits were saying about Amazon, there was a general feeling that they had missed the boat on AI. Obviously, Microsoft had the arrangement with OpenAI, and they brought ChatGPT to the market. And look, that was very exciting, and the market got enthused about what the outlook for Microsoft was. And then Amazon's kind of been the dark horse. It's been sitting there working away. And look, they've now at this conference announced that they've got new chipset. So that's their Inferentia and Trainium chips, which are used to run training and inference on AI models. So really, they're basically setting themselves up to compete in some way with Nvidia. Obviously, Nvidia produces the highest quality GPUs with the broadest range of uses. But Amazon's, just given their size and scale, are able to invest in these new chipsets, but it's not just chipsets, it's models as well. They've got the arrangement with Anthropic. So I think the take-home message for me from Amazon was really about one of choice. Amazon is the largest hyperscaler out there. They've got the most clients. And look, we think they're in a very good position because as they roll forward, they're going to take some of the, where they're leaning on Nvidia with chips, they're going to replace those with their own chips. And they're in a very good position. In FY26, we expect them to make at least $100 billion in free cash flow. So we feel very good about Amazon. And outside of that, obviously, the retail business is still there as well. So look, we feel really good about Amazon, despite the fact that if you look at the market, it does look expensive in pockets too.
I was just mentioning to Meta, I'm interested to see how you're viewing that stock, particularly with that news that that the legal decision in the States requiring ByteDance to divest TikTok. Is that seen then as a benefit potentially for Meta?
Absolutely. Yeah, look, that will be a benefit for Meta. So they'll do well out of that. I don't put that in our numbers at the moment. We'll sort of wait and see where they get to with that. But it is definitely helpful to Meta. They're the largest player out there. And obviously, there's good competition from TikTok, which grew from like a very small base over the last 3 years to be a very big business today. So if that does disappear, the competition goes, well, it's a material boost for Meta. But I'm still unsure whether that asset gets sold to another company and they continue to run it going forward. I don't know. We'll see how that plays out. But yes, a material positive to Meta.
So back to your strategy then, Lachlan, you talk about being essentially at a stock picker's market. What are you actually looking for then when you're looking to invest next year? Yeah,
thanks, Andrew. Yeah, look, we're really looking for companies that can grow irrespective of the macro outlook. So that means businesses like the cloud. The cloud is growing regardless of what happens with the economy or the market for that matter. So that's where we feel very good. That's secular growth. 10 to 20% of all workloads are in the cloud today. So there's still nearly 80% of workloads that come across from on-premise, which means that's a very strong outlook for revenue growth for a business like Amazon in their AWS, or indeed for Microsoft Azure or Google's cloud as well. So really looking for that structural growth, but also on the company level, making sure that they have very good management teams, that they're achieving a good return on their invested capital, that they have very strong balance sheets. And they're the ones we're really focused on, because we know we've got a president-elect who's going to come in with a pro-growth agenda. And what that means is, I guess, inflation may rear its head again. Tariffs are inflationary, and we'll see how that plays out. But we're kind of cautious going to 2025. We always like to invest cautiously, but really looking at the strong growth of the market, we're going to be really selective about where we put our money, and we're also holding a reasonable cash balance at the moment to take advantage of any falls in the market should that happen.
Lachlan, great to get across your strategy there at Swell Asset Management. Thanks for joining us.
Thanks for your time, Andrew.
Let's return home then ahead of the market open this morning. As you can see, SPI futures off around 0.3%. So we are expecting to begin the week negatively, and we'll get right across that in just a couple of minutes. Nadine's going to bring you the open. Stay with us.